Hello everyone, George DeSantis here with a look at the market for the week ending April 13th, 2018. As usual, before we begin to take a look at charts, I'll bring up the disclaimer and urge you to read it since it will indicate that I'm not a professional advisor. This is being done simply for my own purposes, my own edification, and for those who care to take a look. It's purely for that purpose or educational purpose. So let's start by looking at some charts. So let's begin by looking at the weekly chart of the S&P 500. We can look at a monthly, but the monthly we cannot trade, as my friend Alex would say. So let's start here. On the weekly chart, let's look at the moving averages first. The moving averages, well, we have the 9 below the 30, so according to the moving averages, the trend is technically still down. The 4 is below the 9. So we have the reverse of the relationships of these moving averages than what we had over here when we had an uptrend, clearly. Now, last week we had a bullish bar, and all of these bars, the bodies of all these bars, are totally engulfed by this bearish bar that we had back in March. Okay, so it looks as though this February low is going to hold as the low, and that we are gradually going to make our way up to begin a new uptrend here. So we still have this ABCD triangle, and we're looking to break above this upper line of the triangle. Let's face it, there's a target of 3094, but as I said last week, there's no way we could entertain that right now before we break out of this triangle. So let's look for that possibility. And notice that the Bollinger Bands seem to be closing a bit here. So we're getting a bit of a squeeze, not very much, but it may be developing. Now, the other thing to look at on the bearish side of things is that the parabolic is still above the most recent bar, last week's bar. So there is no indication from the parabolic that we should switch to an uptrend on the weekly chart. This is different on the daily chart. So let's take a look at some of the other indicators down here. RSI 12 is just above the 40% line, is at 41.76. Now that is good. It's a good indication because once RSI 12 rather stays above the 40% line, we have the possibility of an uptrend beginning here. So that's another confirmation that perhaps we have support here and we might continue to go up. Now, Williams percentile is still below 50%. As you've heard me say many times, I want to see this cross above 50 before I get more bullish or even entertain buying some more stocks. Now, MACD, the bears seem to be losing some strength. Not very much, but this histogram is shorter than the previous one. And at the bottom of the chart, the sum of the rate of change indicator, Jerry Appel's indicator, is still below the 4% line. So we wait to see this break above 4%. So in other words, folks, we still have a lot of work to do in order to change on the weekly chart, which is where we make our strategic decisions, whether we should be owning stocks or buying stocks. We still have a lot of work to do to have these trend lines reverse and cross above each other again, as they did here, and to break out of this triangle. That's enough on the weekly chart. I think we're still at a critical point here, but let's take a look at the daily chart. Now on the daily chart, notice that the parabolic switched to being below Friday's bar, and that's an indication that on the daily chart we now have a switch from a downtrend, which was throughout this period here to an uptrend when the parabolic is now below the most recent bar. We can also note on the daily chart that the 4 EMA, the yellow line, crossed above the 9 EMA and appears to be looking to cross above the 30 weighted moving average, this green moving average here. And all three averages are now clustering against each other here. So it seems to me that the daily chart is supporting the notion that we are getting ready to break out to more upside movement. Now, RSI 12 is above the 40% line, and although this is typically used with the weekly chart, I think it's instructive to note that. Williams percentile with the 30 period is still below the 50% line, and again we want to see it cross above. And MACD though has turned bullish in the last week, because from Tuesday, Wednesday, Thursday, Friday, MACD turned bullish. And the sum of the rate of change indicator, well, it's still below 4%. So we have a ways to go there. So in summary, the weekly chart is still in a downtrend. And when we look at the daily chart though, we are getting some glimmers of hope, if you wish, of indications that this thing is turning around, especially since when the parabolic drops below the most recent bar, and since we have this clustering of moving averages here, likely to start crossing to the upside. So there we go. We will leave the stock charts, the TC2000 charts, and take a look at the alarm in my phone. Here's the best choice chart showing the extremes for the S&P 500. And I thought we might take a quick look and see that it's still very oversold. It's at the extreme of 11.5. And so there's a lot of room at the top here for this thing to continue to go up. We seem to be rounding here, you know, have a rounding pattern like a cup formation. Well, we'll see how this develops. You can see here the crossing of the 4 over the 9, and we're still waiting to see how it's going to, how these moving averages will proceed from here. The bet is that they're going to continue to go up from here, but we'll see. Before we leave the S&P, take a look at one more chart here. This is a chart of the S&P 100 and the percentage of those stocks above the 200-day moving average. We've seen this chart before. I want to bring it to your attention again because what John Carlucci, his research found was that, especially on a monthly chart, but I cannot get a monthly chart. This is a weekly, but we'll take this anyway. On his research, what he found was when the market is above 65%, when 65% or more of the stocks are trading above their 200-day moving average, that's the S&P 100, we are safe to be holding stocks or buying stocks. When it drops below 65, as it did here at the end of January, actually here when it dropped below 65 for the first time in January, for a long time, that's when the trouble started, and of course it broke down here in February, March. So now what Carlucci's research shows is that the market is tradable between the 50% line and the 65% line, but until it crosses 65% again, we ought to be cautious about buying. We ought to be very careful about buying. All right, let's leave that alone now and go on to some individual stocks. Well, just before we get to the individual stocks, take a look at the impulse bars. The impulse bars for the S&P are now turning green. We have 2 in a row on the daily chart. On the weekly chart, let's see what we have. On the weekly chart, we're now blue. The bar is now blue, so we're allowed to go either long or short. But interestingly, on the daily chart, we have 2 days. We have 2 days in a row where we have green bars, and you can see that the red and blue bars are now fewer and fewer here. So that's a good sign insofar as going shopping is concerned. So get your shopping list ready, as my friend Alex would say. Start making up a shopping list. This is what I'm doing anyway. So we usually start with Apple, and we can see a weekly chart here. Apple seemed to have broken out from this small trading range here. It trades pretty much with the rest of the market, and so it's now showing us this nice bullish bar. You can see these indicators are also showing pretty nice moves here. MACD, some of the rate of change moved above the 4% line again. The RSI 12 is staying above 40, and Williams is above 50%. So all that shapes up pretty good for Apple. Here's Facebook. Of course, we know that Zuckerberg was testifying here last week, so the stock moved up a bit. I did a quick trade on this last week, made a little walking around money, bought and sold it within a couple of days. I'm not ready to buy it back right here, but it's developing a nice looking pattern, almost a morning star pattern here. So it's quite possible it'll go higher from here. RSI 12 is sitting just below the 40% line, 39.75. We don't have Williams above the 50% line yet, but MACD is shortening up. And so Facebook is looking as though it's setting up to be a buy again. Here's Netflix, weekly chart. You can see that this thing was at about $100 a share back in at the beginning of the year. Now it's at last year, and now it's at 311.65. That was a hell of a nice move on Netflix. Well, it rallied up here, pulled back to the buy zone, and last week it had a nice week again. All these indicators here are looking pretty good. Look at the sum of the rate of change. It's way above the 4% line, and these other indicators are above those key levels. Here's one that I still own, Adobe. Nice looking chart as well, trending up nicely. It has a very narrow range, very little volatility. And last week it came down, on Friday it came down 290, but it was up for the week. You can see that these other indicators look pretty positive as well, just as with Netflix. So I'm holding that one. Visa's weekly chart. It's been doing some consolidation for this period here. Made a high here before the market pulled back, and it's been consolidating. But last week it was up a bit. It went up a bit. You could see that green bar. And these indicators, Williams is above the 50% line. And this is one of my favorites because it's it has a very narrow trading range. So there's very little drawdown in periods, you can see these indicators also. Look, MACD is now trending up from below the zero line. So I like Visa here. I don't own it right now. I'm going to buy it again. Here's Align. I used to own this, but I don't own it right now. However, I like the chart pattern right here. It's consolidated, very much like some of the other stocks. Made a high, dropped with the rest of the market, consolidating here. And now last week, it made a nice move up. So I like a line here now. You can see these other indicators looking very similar to some of the other charts we just looked at. Here's Cheesecake Factory. The symbol is CAKE. I bought it 2 weeks ago, not last week, but the week before. And last week it was consolidating this gain. So I still have it. Was up $1.48 on Friday. It was mentioned by Stock Charts, by Bowley of Stock Charts. And so I like the chart pattern, consolidated for a long period and now breaking out. Here's one that I own, CRISPR. It pulled back, went into the buy zone, and it was up nicely last week. Here's something I found in Modern Trader magazine. It's on coffee. The symbol is CAFE. It has a massive bullish divergence. It's speculative, of course. I haven't bought it yet, but I'm thinking about it. Buy a few shares. But it's one that I'm going to keep an eye on. That's all the time we have for this tonight, and we'll talk about stocks again next week. Have a wonderful weekend.